Recording in progress.
So what I'm saying in essence is that for us to be able to have accounting equation, it means the assets must be equal to the capital. Capital is a credit. Where you give out capital to your business, you bring an amount. It might even be your car. You want to use it for Uber transport. If you give that vehicle to the company, what you are doing in essence is that you are bringing in capital. So if the car worth 2 million, you will debit your asset 2 million and debit capital 2 million. And capital is a personal account. You must put the name of the person that gave that money. If it is Madam Tessie Chidebere, you will put it there, Madam Tessie Chidebere, capital, or capital, Madam Tessie Chidebere. If I bring, you will put it there, capital, Mr. John. If it's also about the money, cash, you put it under assets, cash, account, debit, then you credit Ozioma capital, credit, you put Ozioma there. It's a personal account. So all these things is what we call the assets and the capital. The assets and the capital. Now, assets must be equal to capital in your financial statement. That's your financial position, FP. Assets must be equal to capital. Assets must be equal to capital. Now, if you now, at the end of the day, you discover that there is, you are out of the asset, let's say you brought 200,000. You brought 200,000. In your capital account, this is assets now, cash, Abi. In your capital account, you'll be equal to 200,000. This will now balance your account. But if you now pay 200,000 out, if you now buy inventory, you now buy inventory. When you buy inventory, what happens? When you buy inventory, let's say you buy inventory of 50,000. What it means is that you have used part of this money to buy inventory, 50,000, or you did not pay. Let's agree that you did not pay that 50,000. You buy inventory from your supplier, and your supplier you did not pay. What means that you are owing your supplier 50,000. Is that not so? Is that not so? So inventory is if you purchase, is an expenses. That will be 50,000 will be added to your assets. 50,000 will be added to your assets. And when it is added to your asset, you have a liability that you have not paid, 50,000. You will notice that you will now have assets 250,000. But this asset will be classified as inventory, then cash. Are we there? Why this one will be classified as I want to clean this place. That's why I said you should be writing. Please, always write. My body is big enough. That's why I like cleaning it. Now, this one will be classified as, don't forget, capital. And this one will now be what? Liability, current liability, or let's just say liability. Liability. Now, you will discover that this asset, because this is now asset, all these ones are assets, is now classified as, let's say, liability is represented by L, capital L. Your asset, which is A, will now be equals to what? Capital plus liability. Capital plus liability to give you 250. This asset, 250, will now be capital plus liability, which is the same thing as 250. So the accounting equation is saying that your asset is represented by capital plus liability. Your asset is represented by capital plus liability. Are you following me? Capital plus liability.
Recording in progress.
If asset equals to capital plus liability, when we do mathematically change of formula and we bring liability to the other side, where you move plus L to where A is, it will become minus. Immediately it crosses the equal to, it will become minus. So it will be asset minus liability will still be equal to capital. And moving forward, asset minus liability is the same thing as net asset. Same thing as net asset. If you look at your study pack, page 120. Page 120. Page 120. You will notice this I am saying. And capital can also be called equity when it comes to limited by shares, company limited by shares. There are company limited by shares, there are company unlimited by shares, there are company limited by guarantee. Now, all these are registered with companies Corporate Affairs Commission, CAC. They are the ones that are mandated, they are government agents mandated to register company in Nigeria. So when you register your company as limited by shares, you have to have a number of shares. You have to have a number of shares, and that shares is called equity. So, but when it's a sole proprietorship, we talk about capital. But when we talk about limited liability companies, we talk about equity. So capital is the same thing as equity. So if you see equity, we are saying capital. It's a matter of semantics. It means the same thing. Equity is the same thing as capital. Are you following me? Now, I want us to look at an illustration. Now, they said we should find assets. We are supposed to find assets. So, assets is equal to what? Assets is equal to capital or equity plus liability. Number two, we were told to find liability. So, if it is for us to find liability, we have assets. It will be assets minus equity equals to liability, because we are looking for liability. Is that not so? Number 3, they said we should look for equity. You should look for equity. Then equity will be assets minus liability equals to equity. Now, what you do is just to slot in the figures. To slot in the figures. Now, we have equity. We have liability in equation 1. What is equity? Figure. Equity. What is equity? Figure. Give me the figure for equity. Unmute yourself and speak.
$34,561.
Equity, not liability. Equity. Equity, that's E now. E, equity is given there.
79,192.
For Roman figure 1, no, Roman figure 1 is 22,416. 22,416. It's in that question now. Plus liability. Liability is 34,561. 34,561. So our asset will be the addition of this. So what's the addition of 22,416? 34,561. Figure. Somebody should give me the figure. 6 plus 1 is 7. 6 plus 1. 1 plus
977.
9.
56,977.
56977. That will be our asset. That will be our asset. That will be our asset for question 1, Roman figure 1. For question Roman figure 1, I want you to use this method and this formula to do what? To do the Roman figure 2 question and Roman figure 3 question. 5 minutes. Now we want to look at profit accounting equation. We want to look at profit-based accounting equation. Having done asset-based accounting equation, we want to look at profit-based accounting equation. Actually, these formulas that we are giving ourselves for accounting equation is all about, determining, using all this information to determine our incomplete recording. And for our profit, which we are going to represent with P, then revenue, which we are going to represent with R, then expenses, we are going to represent expenses with E. So we will have P, which is profit, is equals to revenue minus expenses, where P is profit, R is revenue, and is expenses. So if we do change of formula, let's assume we do change of formula now. We can, state this formula or this equation. We can state this equation whichever way we want it. We can say profit minus R will give us, that is profit mathematically. If you move it across this place, you move to the other side, it was now if you notice very well, the change of formula, you will notice that we can say P minus R equals to E. Then P plus E equals to R by change of formula. Have you noticed that if you move E, that's the third one, if you move E to the left hand side, since E is a minus, it becomes a plus. So that is why we have P plus E equals to R. Now, I'm saying that in this equation, we do not want to go deeper into the mathematical aspect of it. That's why we are not considering the minus and the plus per se. But just let us note that when you cross a minus to the other side of an equation, it becomes a plus. When you cross a plus to the other side of an equation, it becomes a minus. That is a principle that does not change. And I want you to have it at the back of your mind that it doesn't change. Now, you see that this will now help us to determine our profit, revenue, even expenses, as the case may be. And we want to look at, that's why they put it loss. They need you to appreciate that loss is the negative of profit, which is positive. Positive is an addition to expenses. Plus is a minus to expenses.
Yes.
So if your expenses is 50,000 and you have a loss, it means what you sold is less than the expenses you made. And if your loss is 3,000 and your expenses is 15,000, what it means is that you minus that loss from your expenses to get your revenue, which is 12,000. Which is 12,000. If you minus 12,000, which is the revenue that you made, the money you made, you minus it from the expenses you incurred, you have a loss. Revenue is 12,000. Expenses you incurred is 15,000. You have a loss of 3,000. Whichever way you look at it, it usually comes down to the same thing. But you need to interpret the question properly. If you cannot interpret the question properly or follow the formula the way it is given to you, you will miss it. That's why I said you might not rationalize it now. Just follow the formula. If you can follow the formula, you know a loss is the negative side of a profit. A profit is the positive side of. So you get it. So if you add it to expenses, you get your revenue. You don't need to rationalize it. Number 3, let's go to Roman figure 3. On your own, look at it again. Go to number 3, Roman figure 3. This time around, they said we should look for what? The expenses.
Expenses. Revenue minus profit is equal to expenses. So the expenses is 19,000. $19,000. Everybody can collect onions and cut now. What is the time? Time never reach Ogoku. You wash plate, you leave the spoon and everything inside it. Eh? Come and watch this thing come out. See rice, the way it scattered this place. I don't even understand you. I don't know why you're this dirty. Where you? You know where they talk to? Why you leave those spoons inside there? See rice, where you do this? See as rice scatter that place. Hello?
Roma figure 3.
It's
I can hear
90,000,
you.
sir. 90,000.
19,000. Confirm. OC, confirm.
Sir?
Confirm Roma figure 3. The answer 19,000. Confirm if it is true.
Yes, sir, it's correct.
It's correct. Brilliant
Yes, sir.
students.